Hello friends, this is Raj Sastry from Raj Option Trading. Today is August 18, 2021. I want to talk about top Chinese stocks. As you all know, Chinese stocks have taken a beating in last couple of months, mainly because of government crackdown on many of these companies. So with that, let's look at a few Chinese stocks here. First chart I have here is some mid-cap Chinese stocks. We got I-MAB, $66 stock, $5 billion market cap, has done great, 121% in 1 year. And then we got Daku Energy, ticker symbol DQ, $48 stock, and has done great, 117% in 1 year. And we got few more. We got Uptech, Noah, QFIN, and so on and so forth. And then I also got large cap stocks here. NIO, everybody knows NIO, Chinese Tesla, has done great in 1 year, 191%. We got ACH, aluminum company, has done great, 123%, and so on and so forth. So we will look at many of these companies in a little more detail and see if it's worth buying these stocks at these levels. So with that, let's look at small cap stocks now. From a small cap stock perspective, as you can see here, we got Canon, which is a smaller company here, $1 billion market cap, $8 stock price. It's into cryptocurrency hardware equipment for mining. And as you scan through here, from a insider perspective, nothing much is going on. Institutions are selling a little bit, probably taking advantage of a little bit higher price in the crypto. And we got sales and sales growth here. Looks like they got a good quarter over quarter sales growth, which is nice, and gross margin also is good. So this qualifies for rule of 40. Quarter over quarter growth plus gross margin greater than 40 handily beats the rule of 40. And as you scan through here, they don't make money yet. Right now it's losing money. RSI is 54, tells you if you want to buy some, be a little bit cautious. It's okay to buy a little bit. Right now it's below 55. That tells you stock is oversold at these levels. It's good to buy slowly. And then as you scan through here from a performance perspective, stock is not doing great in 1 week, 1 day and 1 week, but has done nicely in 1 year. So stocks like Canon, I would typically buy when there is a huge news, negative news in the crypto area. That's when stocks like Canon, they will come down to earth. That's when you buy stocks like Canon. And then we got a couple more here. I've highlighted few stocks for you. For example, EHang, it's a aerial autonomous aviation type company. They make these small aircraft which are autonomous. And $23 stock. This stock, I have seen this stock going up and down wildly. Right now, as you can see here, they got nice market cap, $1.3 billion, and institutions are buying. That's a good sign for this company. Stock price is low, $23. Institutions are buying this company. I think I would buy with the institutions at these levels and go from there. And they've done nicely for 1 year. Quarter over quarter growth is not there right now. Nice gross margin. I like the gross margin here. And as you scan through here, company is still not making money. Net margin is negative. RSI is low. Relative strength index is 34. That tells you stock is oversold at these levels. It's okay to accumulate here. And as you scan through here, valuation perspective it's a little high. That's why you got PS ratio, price to sales ratio, 47. On the other hand, we got high short ratio. Any good news? These stocks can surge higher. It's a 21% short ratio here. And as you can see here, stock has been not doing great last last month or so, but yesterday stock went up. It's kind of telling you, hey, you know what, I can only take so much of downturn. I'm ready to go up slowly. That's why you see in a 1 day chart, stock is making some progress here. And they've done great for 1 year, 166%. Stocks like EHang have seen this stock so many times and through the years. It's good to buy when the stock is down, like right now. It will give you nice pop up and it will go up nicely. And then you got FinVolut here. As you scan through here, Important things to see is really what institutions and insiders are doing, and also how is the growth. With this company here, we got nice sales here, 998 million, and nice sales growth in 1 year, and nice gross margin. That's a good fundamentals there. I would love to see some quarter-over-quarter growth, but at least we got year-over-year growth, nice gross margin. And as you scan through here, performance perspective, last up to 6 months, company did not do well. Stock has been sliding, mainly with this Chinese crackdown. I would probably take advantage of this, stock pullback and buy some FINVolut at these levels. Then we got UXIN Uxin here. I think it's a $2 stock, very low price, and market cap is 1.1 billion. And institutions are buying it. That's a good sign. Whenever you see institutions buying a company like a small company like UXIN, that tells you institutions have some confidence level in this company. And as you see here, quarter over quarter growth is nice, 89%. Right now, company is not making any margins, a negative gross margin, negative net margin. So that's why company like UXIN, you got to be a contrarian to buy because there is no solid fundamentals. Even though there is a sales growth, there is no margin right now, negative margin. So with that, stock has been falling off of late, as you can see here, in 1 day, 1 week, all the way to 1 month, but has done nicely for 1 year. You could be a contrarian and buy UXIN at these levels and go from there. Then we got BTCM here, Bitcoin mining. As you can see, a $6 stock, and it's got great sales growth. As you can see here, it's on the basis of $6 million sales here. That's why this sales growth is accelerated or showing exaggerated, because it's off of this lower $6 million number. And as you scan through here, RSI is 50. That tells you you can buy at these levels. It's below 55. And as you scan through from a valuation perspective, it's a little expensive. Stock went up by 7% yesterday. So I would buy this company also on any pullback and crypto related negative news. I also like Jinko Solar, JKS. It's a solar company. Typically, solar companies will do nicely in the second half of the year, especially as governments give some subsidies to buy solar. So it's as you can see here, there is not too much sales growth. It's negative quarter over quarter. Stock has been falling off of late. RSI is low. At these levels, you could start accumulating Jinko Solar also and go from there. And then we got NIU, one of the Chinese, scooter or two-wheeler type play, electric two-wheeler play, electric scooter, $24 stock. I love this company. Anytime this stock falls down, as an example, after last quarterly earnings, stock came down to earth. Those are the best time to buy NIU. And even up here, right now, RSI is 34. Tells you can still buy the company. Fundamentally strong company, nice sales growth as you can see here, and a good gross margin. And then you got a couple more here. Lexi as an example, nice fundamentals from a quarter over quarter growth perspective and gross margin perspective. It's a financial company. As you can see, your stock is taking a beating here. In 1 year, they've done negative 15%, but it's trying to show some signs of improvement in 1 day. So, those are the few stocks I would look for in this Chinese crackdown and go from there. And next we got small cap again. I've highlighted a few stocks here for you, like Baozun as an example, and So Young. As you see here, they got nice fundamentals when it comes to sales growth perspective. From a gross margin perspective, it is pretty respectable. Baozun is again negative positive net margin. It's in a bigger position, better position here, and stocks have been falling off of late, as you can see here. So Baozun is trying to turn around slowly in 1 day chart. That tells you this may be turning around at this point. And Soying is also a great company, as you can see here. Nice sales growth, but stock has been falling off. Could be good time to buy Soyang given good fundamentals here. And then you got DAO here and OCFT OneConnect, and both have got nice sales growth here, as you can see here, and nice gross margin too. And stock have been falling off. And with DAO, there is some improvement in the near term 2-week chart here. I would pick up some DAO and OCFT at these levels. And there are other stocks like GoTo stock got obliterated or tumbled so drastically because of Chinese policy around online education K through 12. So, stocks like GoTo, you got a very long-term time horizon, and take it from there. And next we'll look at mid-cap stocks here. From a mid-cap stock perspective, we got great companies here. I like the companies like I-MAB, Daqo, Up Fintech or TIGR. As you can see here, the companies I've highlighted here, even QFIN for that matter, all these companies have got nice sales and sales growth and okay gross margin, in many cases nice gross margins. And also, as you scan through here on a performance side of the house, performance is not so great off late because of Chinese crackdown, but few stocks like 360 or QFIN here, it's showing some improvement. They can only take so much beating, it's showing some improvement here. And same story is with Noah, it's also showing some improvement here. And as you scan through here, we got RERE, $11 stock, and a nice gross margin here. And also, as you can see here, institutions are buying this company, RERE. That's a good sign for this company. And as you scan through here, in 1-day chart, it's going up. That's always good. And I would buy some RERE at these levels and take it from there. Then we got here API, Agora. It's one of those stocks which is not doing great of late. It's a Chinese Tulio type company here with helping with the communications and nice sales growth. I love this sales growth here, and stock has been falling off of late, and RSI is 34. I would buy some API or Agora at these levels and take it from there. And then I got HUYA here. HUYA is again a great stock. Many of you know this company, $9.50. And as you scan through here from a 1-year performance perspective, company has done great from a sales growth perspective, positive sales growth, and as you can see here, positive margin. Stock has been falling off of late, as you can see here. It could be a good time to buy some HUYA at these levels. And then we'll look at a few more stocks here and take it from there. And as you scan through this list, key things to notice is really look for RSI levels. If the RSI levels are low and stock is making some progress in near term, and if there is a strong sales growth, from a fundamental perspective, that's when you come in and buy some of these companies. Anytime you see some recovery in the near term horizon, that could be an indication for you. Hey, you know what, stock is trying to turn around now. It's a good time to buy at these levels. So with that, let's jump into next slide here and look at a few large cap stocks. As you go from low cap to mid cap, to large cap, that's where you'll get more stability and lower risk. So if you want to be less risky, look for mid cap and a little bit, say large cap stocks. It's a little more comfortable to invest in those because they have a little more resources and cash positions, as an example. My favorites here is NIO Chinese Tesla, as many of you know. Stock price is $38. At these levels, I would buy NIO, no issues at all here. And nice sales growth. I love the sales growth here. 202%, 127% quarter over quarter. And as you scan through this year, they also got a negative net margin right now, which is okay. And stock has been falling off in 1 day, 1 week, 2 week, and 1 month. I would buy some NIO at these levels and take it from there. And I also like some of these aluminum companies here. ACH has done nicely, as you can see here, 123% performance in 1 year. And I love Lee, ZLAB, Billy, and Weibo here. And all of these have got a nice sales growth, as you can see here, and nice gross margin. In case of Weibo, there is also a great net margin here. Companies making money. And all of these have got from an RSI level, low RSI. Stocks like Billy is completely sold out, as you can see here. Could be good time to buy some Billy at these levels. So with that, I would buy some of these stocks at these levels here. There could be one or two, couple more down days, but it's good to buy these for long term. And we got Yum China, YUMC. As you can see here, $60 stock, nice sales growth here, and they're also making money. Net margin is positive. Stock has been falling off of late. I would buy some Yum China at these levels also. And then you got JD and Pinduodu or NetEase. I like all of these companies. As you can see here, they got pretty much nice sales growth, as you can see here. And in NetEase, we got a good gross margin also. I would buy these companies at these levels. As you see here, some companies like BZ as an example, it's showing some nearer term strength here. That may be a sign that this company may be stabilizing and going forward might be going up. So that's a good indication. Then we got here a few more Chinese large cap stocks here, starting with trip.com. And my favorites are really XPAV or XPeng, ZTO Express, mainly because there is a nice positive sales growth in case of ZTO. In case of XPAV or XPeng, there is a institution buying the company. That's why it's a good one. And also, as you scan through here, XPeng is showing some improvements in one-day chart. That tells you, the stock may be stabilizing at these levels. It might make its way higher. And then we got here a few more here: Alibaba, GDS, Wipshop. All of these have got nice sales growth, as you can see here, and stock have been not doing great of late. I would slowly buy these quality companies slowly and take it from there. As you scan through a DD here, a recent IPO, it's showing some signs of turnaround. I would buy some DD and slowly accumulate it at these levels. So with that, let's look at a few of these companies in a little more details and take it from there. So we have four stocks here. First is EHang, ticker symbol AH. It operates as an autonomous aerial vehicle technology platform company. Anytime you want a drone or a passenger plane, a small plane which operates through autonomous technology, this is your company here, EHang. And this stock is trading widely. As you know, it goes up nicely, comes down, gives you a lot of trading opportunities in between. Right now, earning is coming up in next 6 trading days. And one thing to notice here is really look at on the balance volume. On the balance volume is picking up nicely, even though stock is kind of making its way down. That's a bullish divergence. Anytime you see stock falling down, but on the balance volume or even volume for that matter going up, that's your cue that this company is the smart money is accumulating the stock. It may be okay to buy at these levels. So with that, EHang $23 stock, good 1 year sales growth here, nice gross margin. Stock has been falling off, trying to recover in one day. I would buy some EHang at these levels and take it from there. Then we got here BTCM, again a Bitcoin mining company in China. All the Bitcoin companies have got obliterated, pulled back so hard in China. I would probably buy some of this stock at these levels. As you can see, here earnings is done. I think it was earlier this week, and stock is showing some signs of progress here. It might be taking on its 25-day moving average at these levels. Use it as a support level and try to bounce off of its 50-day moving average. Right now it's bearish, as you can see here. We have 200-day moving average on top, 100-day here, 50-day, 25-day. Right now it's bearish, as all these moving averages are lopsided with the longer term on top, short term on the bottom. But here also, as you can see here, on the balance volume is picking up. That tells you these smart money managers, they are buying the company even though stock is falling. There's an increase in on the balance volume. That's a bullish divergence again. And then you got here new designs, manufactures, sells smart electric scooters in China. I love this company. I've been trading this company all along. Good time to buy this company is really, whenever stock is depreciated. Typically, if a stock is down after the earnings, it will go up. Sometimes, if the stock is already up after the earnings, it will come down. So those are great time to trade this stock. Right now, NIU, as you can see here, stock, the earnings just got released and stock is trying to make its way higher. This could be a good time to catch the stock here, evidenced by on the balance volume. If you look at the on the balance volume, right now it's picking up. That tells you smart money is going into the stock at this time. It's okay to buy the stock along with the smart money. As you can see here from a stock chart perspective, it's negative, mainly because we got here long-term 200-day moving average on the top, and we got short-term moving average, which is 25-day, which is the green line here. It's on the bottom here. So right now it's negative, but I could see this turning around already, evidenced by stock going up and also on the balance volume turning to go up. Then we got Lexi here. Lexi is an online consumption and consumer finance platform here for young professionals in China. As you see here, stock is a wild trader. As you can see, we already have earnings is in 6 trading days. That's a good sign. As you see here, stock is trying to make some improvement here. Anytime stock is down like this before earnings, typically it went up a little bit after the earnings. So I would probably buy some Lexi financials probably before the earnings, but don't try to buy call options here because IV percentile is so high, 80.5. You're going to pay more money to buy call options here. I would buy stock outright here. In this one though, right now, as you can see here, on the balance volume is trending down. There is a small tick up. So I would buy some Lexi Financials low dollar stock. It's around $7.20. Nice fundamentals here. I would buy some Lexi at these levels. Next, we got a couple more here, starting with the Baozun here. Baozun again, all these Chinese stocks, as you can look from this chart here, it's a bearish. We got 200-day moving average on the top, 25-day moving average on the bottom. Earnings is in 2 trading days here. I would buy some Baozun even before the earnings here and take it from there. On the balance volume, pretty much coming down a little bit, showing some tick up here slowly. It's a good time to buy some Baozun at these levels. As you can see, there's nice fundamentals. I like this quarter-over-quarter sales growth and also nice gross margin here. Stock has been falling off, showing some progress in 1 day, which is yesterday's trading. And then you got here OCFT here. OCFT, as you can see, a cloud-based platform for fintech solutions here. Stock has been falling off of late, but in the nearer term, there may be some improvements here. And on the balance volume, as you can see here, it's falling, and right now it may be stabilizing a little bit, tick up here. I would probably buy some OCFT at these levels and hold it from there. OCFT has got nice sales growth, as you can see here. Net margin is negative, and as you scan through here, it's showing some improvements in 1 day chart here. And then you got DAO here, which is UDAO. And as you scan through this here, again, negative from a chart perspective or a technical perspective. It provides online services in content, community, communications, and commerce in China. And same story here. After the stock gap down big time here, on the balance volume dropped. Now on the balance volume is trying to pick up. That tells you smart money is now flowing into the stock, which is a good sign. And DAO also has got positive sales growth and nice gross margin. And then you got So Young SY. It's again a platform for medical aesthetics and consumption of healthcare services. I think it's a good company. As you see here, stock has been going down of late. Earnings is in 7 days or so. And as you scan through this here, they got nice positive fundamentals from a quarter over quarter sales growth and also nice gross margin here. Stock has been dropping off, as you can see here, all the way from 1 year to 1 day. And as you scan through here, earnings is coming up, and on the balance volume, probably it's showing some stabilization, as you can evidence by flatness here. So I would buy some So Young at these levels and hold it from there. Next, we got few more here. We got I-MAB. It's a biopharmaceutical company, discovers, develops, and commercializes autoimmune disorders to treat cancer. This is a nice looking chart. I like this chart here. Unlike other stocks, here you can see the 200-day moving average is down here on the lower side, which is a good sign, and we got 100 and 50 and 25-day moving average on the top. That tells you this is a little more better company from a technical perspective here, and stock typically bounces off 200-day moving average, as you can see here. One bounce and one more here, bounce, and one more here, bounce, and it might try to bounce back to 200-day moving average, or it might turn around at these levels and go up again. Again, this is a healthcare company, typically a little more stabler compared to other companies. And then we have Daku Energy here. This company has been down of late. Daku, as we all know, it's a solar company in the solar area. And I, like, Daku, it's a great company, but off late stock has been falling off, as you can see here. And I would buy some Daku Energy at these levels. Mainly, there is an issue around the Chinese, human right violation in the area this company operates in. Trading its earnings is in one trading day, which is today. I would buy some, probably. You may not get an opportunity to buy before the earnings. Look at how stock is trading after the earnings. If it is still down, you could pick some up. It's a great company, and we can go from there. And on the balance volume, as you can see, it's dropping down. Could be good to buy when chart is ugly and be a contrarian here. And then we got here TIGR Uptech Financials. This is into actually trading, stock trading, and security trading. And this is again a good company. And as you scan through here from a fundamental perspective, as nice sales growth here. I like the sales growth. Gross margin is also nice, as you can see here. And stock is kind of going down of late, but still from a chart perspective, there is still some positiveness evidenced by 200-day moving average at the bottom here, and 25-day moving average somewhere in the middle. So from right now, from a on the balance volume perspective, looks like it's trending down right now, and we do have some little positive indication in the nearer term. I would buy some TIGR at these levels and take it from there. And then you got here QFIN. It's again a digital consumer finance play. QFIN is also called 360 Digital. As you can see here, stock got obliterated. It's down all the way down, crashed down, as you can see here. These guys are into consumer finance platform under 360 brand here. And earnings is in 2 trading days. Typically, when the stock is this much off, you could see a bounce back after the earnings, evidenced by a small positiveness here. Trading is in 2 days. I would recommend buying some of this company here. And if you look at the on the balance volume, it's showing some sign of stabilization. Probably not too much, but at least it's showing some tick up slowly. I would not bet too much into it, but I think it's a good one to buy at these levels and take it from there. Next, we'll look at a few more companies. We got HUYA here. HUYA operates game live streaming platforms in China. And as you can see here, from a stock chart perspective, we got red on top, which is a negative, and we got the green on the bottom. and on the balance volume is trending down. So I would probably buy some of this HUYA at these levels and take it from there. I think they also had their earnings recently. And nice, it's a okay sales growth, not great, it's okay sales growth. As you can see here, stock has been going down off late. Yesterday, stock kind of stayed neutral, did not do much. I would buy some HUYA at these levels and hold it for a while. And then we got here Lee. Lee is one of my favorite stocks in China, along with the other stocks like NIO. In this one here, they manufacture and sell smart electric vehicles. As you can see here, from a stock chart perspective, it's in a positive territory here with the 200-day moving average at the down below and 25-day moving average on the top. This stock, can bounce off of its 200-day moving average here and go up. And if you see on the balance volume here, it tells you there is a steady volume here. Volume is ticking up. That tells you it's a negative, it's a positive divergence here. There's a divergence from the stock price and on the balance volume. I would buy some stock at these levels with this, divergence going on here, which is a bullish divergence. And then you got BILI here. It's again provides a range of content including video services, mobile games, so on and so forth. Trading is in two earnings is in 2 trading days. Stock has been down below 200-day moving average. This used to be a high flyer stock. I would probably buy some of this stock at these levels here. As you can see here, BILI $67 stock. I cannot imagine this. This was much higher. The Chinese crackdown is taking a big toll on this company. Also, I would slowly buy at these levels and take it from there. And then you got here Pinduodu. This is into e-commerce platform in China. Stock has been falling off of late. Earnings is coming up in 5 trading days. Same story right now. Stock is negative with the 200-day moving average at the top, and we got 25-day moving average at the bottom. And on the balance volume is telling you money is smart money is not buying into this stock yet, but it could be a good time to initiate and buy slowly and hold the stock for a while. And all these companies here, nice fundamentals, sales growth and gross margin. So I would buy some at these levels here. Next, we got 4 more stocks here, starting with NetEase, one of my favorite stocks here. They're into online services, gaming, communications, and whatnot. Stock has been dropping off of late, as you can see here. On the balance, volume is also going down here. Chart is ugly right now, but NetEase is a winner. I would buy and hold this stock for a long time. And right now they got nice gross margin here and nice net margin. Company is making money. Stock has been falling off of late. And then we got here ZLAB. ZLAB is a biopharma company. They're into treating the oncology and cancer disease in China. This is a little more bullish. As you can see here, we got 200-day moving average at the bottom here and 25-day moving average somewhere in the top here. They had their earnings is in 2 trading days here. I would buy some ZLAB at these levels. Right now, $140 stock price here. You could even, as you see here, this is not a good time to buy call options here. With the IV percentile, it's so high. You're paying too much for stock, call options at these levels. You could buy stock at this point here, or you could even buy some put options if you're a premium seller. So with that, I love this company. It's a great looking chart here, giving some opportunity to buy at these levels. Typically bounces off if it's a 200-day moving average. Even though it's down here, came up, trying to go about 200-day moving average here. And then you got Yum China here. They operate through KFC and Pizza Hut into restaurant type business here. Nice looking chart. Right now, 200-day moving average is at the bottom here. 25-day moving average somewhere at the top here. At this point, it's a good one to buy at these levels. They are done with their earnings. And as you see here, on the balance, volume is kind of down. I think it may be stabilizing at these levels here. I would buy some of this company at these levels here. And as you see here, M China has got positive sales growth and a nice gross margin, positive net margin. Company is making money. And then you got Weibo here. Weibo is into social media platform here to create, distribute, discover content. Again, stock has dropped significantly, as you can see here. I would buy some Weibo. As you see here, on the balance volume is showing, hey, you know what, people are smart money is pulling into the stock. This is one of those stocks where there's a bullish divergence. Stock is coming down, but on the balance volume is telling, hey, folks are buying the stock, folks are bullish. So this is a positive or a bullish divergence. I would buy into this company at these levels here and accumulate a nice position. So with that, people always ask me, when do I buy stocks? I put some quick cheat sheet for you to look through. Look for stocks that are oversold, RSI less than 50 or 55, and recovering in the shorter time frame. Always buy and sell in stages. I've seen some people buying thousands and thousands of stocks at one shot. I don't recommend it. Buy in stages. There is no need to buy one stock in large quantities. That will make that will ensure you don't sleep at night. You get tensed up. Instead, buy a couple of stocks. If you have a $100,000 account as an example, don't just buy one stock. At least have maybe 6 to 7 or even 10 stocks for that matter, and trade around those. That's a better bet here. And look for stocks consolidating for a while and showing some signs of bullishness. For things like this, you can also use a TTM trend indication or a TTM squeeze indication that tells you stocks that are consolidating for a while, and then look for a squeeze that tells you stock is going to go up or down. And look for stocks nearing 52-week high, and also when they give you some pullback, that tells you that maybe a good time to buy slowly. And when the stocks are nearing 52-week low, look for a signs of price increase before buying, so that way you are not catching a falling knife. And look at stocks with a huge drop and showing some signs of bullishness. Typically after a huge drop, there will be a pop. That could be good if you're trading the stock. And look for high short ratio. This can be a good catalyst when the stock is sold off. And if the insiders or institutions buying the stock, that's always a good indication. When the stock is down, institutions are buying it, insiders are buying it, you could buy the stock along with them. And look, typically if you want to buy long-term investments, look for fundamentally good companies with positive sales growth and nice gross margin. And also when you buy secular growth, either biotech or technology stocks on a down on a bad news like FDA, clinical trial, or even some negative earnings, you could buy when they're down on a bad news. Make sure fundamentals are good. That can give you nice bounce back. So with that, thank you very much. Happy investing and trading. Please subscribe.